Let's bring in Scott Bauer of Prosper Trading Academy, CEO over there. And Scott, thanks for joining us. One thing that comes to mind, a question that comes to mind, given the fact that when stocks were really plunging, that brief 20% bear market for the S&P 500, the VIX never made it above its last highs. And now, you've recently had stocks rallying and the VIX not going really below 25. Is the VIX broken?
I don't think it's broken, Abigail, but it certainly has decoupled somewhat from the market trends that we know the VIX to represent. And, I've been trading this thing literally since it came out in 1993. And this is one of the first times where I've seen an extended period of time, both on the top and the bottom, where it really has decoupled because, everybody was waiting for the VIX to have that capitulation, to see that 40 print, a few weeks ago, a month ago, when the market was really towards its bottoms, and it never happened. Same thing now on this big rally to the upside. And you mentioned, what happened this morning. S&Ps were up, VIX was up also. On this big rally up, you would think the VIX would be trading much lower than 25, and it's not. So there is a little bit of decoupling there.
Well, let's bring in another risk asset class, and of course, the credit high yield bonds, because if you take a look, and we did look at this last week, and I'm so curious for your perspective, because it's such an interesting chart in the terminal, which is a look at junk bond yields and the VIX, and they're highly correlated. More recently, yields have stayed higher. The VIX, while not super low, it is lower. That breakdown, it's breaking down a little bit. Do you think that the VIX is going to jump up and meet yields then?
I really do. And historically, when you see a VIX in the range of 20 to 30, and we're smack dab in the middle of it right now, not only for junk bonds, but you see a widening of credit spreads. We saw it in 2016. We saw it in 2018. It's a little bit of a flight to safety, and we're back at it again. The 5 and 10 almost inverted today. So, this is a psychological influence on the marketplace. And again, the dynamic between what the VIX is doing, the overall market is doing, and what credit spreads are doing actually throws a big wrench of uncertainty into the marketplace.
Yeah, that seems to be the theme of 2022. Well, given this disconnect that we are seeing between the S&P 500 and the VIX, if you think the VIX is going to go higher, and I'd be curious for you to mention a level, whether it's 30, 35, 40, does that necessarily mean the S&P 500 has to go lower given the disconnect?
So I do think we rally from here in the VIX, but only, Abigail, because the VIX has been making higher lows for the last 6 or 9 months or so. And this 25 really is support here. So I'm not overly bullish on the VIX. I do see a short-term bottom here, which is why I'm selling some put spreads in there. In fact, I'm selling the June 29, 24, 22 strike put spreads collecting about 70 cents. But just because the VIX may rise from here, and I see it really hovering around the 28 to 32 area, that doesn't necessarily mean that we're going to retest those lows in the market that we saw, 4 or 6 weeks ago.
Great perspective, as always. Scott Bauer, CEO of Prosper Trading Academy. Thanks for joining us today for Options Insight. And from New York, this is Bloomberg.